Welcome back to Wall Street Confidential. Dividend stocks are safe stocks, but my question to you, Jim, is how can you trust the dividend?
Well, I think you've got to look at the earnings, and then you've got to see how much they make per quarter and try to match it with what they pay per quarter. And that I think you'd see from Freeport that they were going to make very little because the price of copper had fallen so much, and that one was clear. There are other groups of stocks that are based on cash flow. You have to look at their cash flow, and here I'm thinking about Kinder Morgan Partners versus what they pay out. Obviously, in a disaster where natural gas use is down 10%, even Kinder Morgan could be in trouble. It's a toll road. But you look at that quarter, you look at what they've made over a quarter, and what we're looking for are puny dividends where the company's been chary with the stocks that have fallen dramatically. And then you get your chance because the yield's great. Now, let me give an example of where people run afoul of this. You take Joy Global. Joy Global, which is a mining and mining equipment company, yields more than 4, has had a precipitous decline. It would seem like that one would be fine. That's a little more like Freeport. You actually have to make a projection of what the company could earn this quarter as opposed to what it earned before because it's a commodity-oriented company. All commodity-oriented dividends are suspect with the exception of the oils where some of the oil companies did not go nuts, so to speak, or have cut back projects. But I really feel that if you have a commodity stock a la Freeport and you match the commodity with how the company's done and you see that if they were making $4 per a ton of copper and it's now 1.25, 1.5, you know that they can't pay the dividend. So be careful of the commodity dividend plays. The other ones I like.
What about
like the Proctors?
The Energy Trust Partners, you mentioned that on Mad Money, has
Right.
a huge dividend, but it's a pipeline operator, so it
That's
has
fine. Well, no, that's fine. They just take a toll. They take a toll.
Okay.
Obviously, again, if everyone in the country sets their thermostat at 60, in the winter, then natural gas is going to suffer. So I don't want to say anything's bulletproof. There's nothing bulletproof right here.
And the last question I have is about GE. I've been talking to a lot of analysts. Now, GE has guaranteed their dividend through 2009, but people I've been talking to just don't believe it.
Well, there was a line in the sand drawn. I do believe that you can, with a company like General Electric, make a 12-month projection of covering the dividend. There was no projection for 2010. So, I mean, I think people should be mindful that you're going to get 4 more dividends, and then after that, it's jump ball.
Great. All right. Thanks so much, Jim. Jim has a great article on realmoney.com about dividends, so please check it out and stay tuned for more from Wall Street Confidential.